Hey there traders, this is Steve Miley, the market chartist for FX Explained, and our regular weekly MacroWatch update for the week commencing the 30th of May 2022. Strong stock index rebounds for technical bases, risk on. Let's kick off by looking at those macroeconomic and geopolitical developments we've seen from the past week. While selling exhausted in the equity market saw recoveries last week and a cross-market shift to a risk-on theme. This was helped by some positive forecasts from Macy's, Ralph Lauren and Nordstrom. And Fed minutes pointed to hints of flexibility, helping the more positive outlook. PCE data, which is the Fed's preferred measure of inflation, was released on Friday. It was better than expected, highlighting potential for inflation to be peaking. Now let's take a look at the global financial market developments for last week, ending the 27th of May. Well, bases were secured across the major US equity indices, the S&P, the Nasdaq, the Dow, having the S&P the prior week avoided a bear market, just avoiding a move on a closing basis below 20% from the peak from the beginning of this year, and bases have been secured with strong impulsive moves higher through resistance levels. European equity indices have had even stronger recovery efforts in here, at least certainly from the FTSE's point of view, with the FTSE now poised very close to cycle highs posted both this year and back from 2020. US 10-year yields continued their move lower in here, with higher yield pressures certainly easing significantly, now pointing to still lower yields. And that lower yield theme has helped the US dollar continue its move lower from the prior week, pushing down and signaling a short-term, at least bearish reversal in here for the US dollar index. Gold has built a base over the past 2 weeks in here, aided by that US dollar weakness. And oil continues to push to the top end of what's been a range environment and threatening still higher prices. And copper has managed to form a small base in here over the last week or two, and is now less vulnerable than previously seen through April-May. Now let's take a look at the week ahead, commencing the 30th of May. Well, we're still closely going to be monitoring the war in Ukraine as ever. And Monday is the US Memorial Day holiday, so cash equity and bond markets are closed in here. UK markets are closed on Thursday and Friday for the Jubilee holidays. On the central bank side, we get the Bank of Canada interest rate decision statement and press conference on Wednesday. And it's a busy week for data. We do get that US Memorial Day holiday on Monday, but we do get German CPI data. Chinese PMI data comes out on Tuesday, along with German unemployment and Canadian GDP. And then we got Australian GDP on Wednesday, German retail sales, and then really we kick into gear with the global S&P manufacturing PMI data, plus the US ISM manufacturing PMI, and that Bank of Canada interest rate decision all on Wednesday. Thursday sees UK markets closed, but we do get that US ADP employment data. And then on Friday, we get UK markets still closed for the Jubilee holiday, but we get global S&P services and composite PMI. We get the US employment report, and then also the US ISM service PMI data. So it's a busy end to the week with UK markets closed. I'm going to wish you all a great trading week. Please do stay safe out there. I'll be back with you next week for another Macro Watch. So traders, don't forget to catch us on the next FX Explained Macro Watch and all the great content on fxexplained.co.uk.